AMC is about to go boom boom. You guys were waiting for the boom boom candles and we are about to get them. The head and shoulders pattern is now almost fully formed. One would say it is fully formed. There is some potential moves to the downside that are still coming. I personally don't think that is the case. I am really watching this close by the end of the day today. If we can break above these key technical factors, we are going to get into here in this video, but AMC is making an incredible move towards the end of the day today, now up 1.37%. We were down over 2% intraday during the day. Now, there's a lot we need to get into, so I don't want to waste any of your guys' valuable, precious, sweet time. Hit the like button for me, consider subscribing to the channel. Let me know what you think about the boom boom candles, boom boom, whatever you guys want to call it, that is coming for AMC stock. Do you think it's going to happen before the new year or after the new year? Very important. Let me know that information. So let's get straight into it. AMC, like I said, making a strong move right now. Why is this? Because we are seeing low volume for the day. So we just jumped up about 1 million in volume in a relatively very short amount of time. So what does that do when you have low volume? One would say bearish low volume. That starts to converge into higher volume of bullish volume, people buying the stock. Well, you see big volatile moves in the share price, and that's what I expect throughout the rest of the day today. It wouldn't surprise me if we closed up 3% for the day. But what is very important and what you guys need to watch out for, we are approaching this right now, is the 20-day simple moving average. This has been our resistance level. This has been dragging us into the dirt, and we are now under this neckline at about $28.50 per share. So we're either going to see that move back down to about $25 per share, or we retest this like we are right now and then break above that. If we see a break above that by the end of the day today, tomorrow is boom boom time. We're going to boom boom town tomorrow, starting tomorrow, because you're going to see trading algorithms that are doing, you guys have heard about it, basically, trying to manipulate who is buying, who is selling by causing these big moves. That's going to be reversed to the upside. So believe it or not, trading algorithms will help make this thing go boom, boom. As long as we cross above this key factor right here, this neckline, as well as the 20-day simple moving average. If we make our way up to the top line of the Bollinger lines, you could see that is right on the 200-day moving average. So that's what I want to see happen. And then obviously we will ride the upper end range of the Bollinger lines, just like we did back here in June. That's what you ultimately want to see. And that's ultimately what is going to happen. So an inverse head and shoulders, for those of you guys that are unaware, is about 85% probability rate of success. And that means obviously inverse head and shoulders comes after a head and shoulders, and that means the stock is bullish. Once you see that inverse head and shoulders, that confirmation, like I think we are seeing right now, that's bullish. Head and shoulders, what we've seen back here, not bullish. That is bearish, and that's exactly what happened. So if we do break out and we see this inverse head and shoulders actually confirm and we start boom boom into the upside, watch that 200-day moving average. After that, like Benzinga has suggested, we could go to about $47 per share, because the average return of an inverse head and shoulders that plays out like this is about 50%. That puts us at $47 per share. JP Morgan is saying, hey, you can buy AMC after it's fallen 45% from its highs in just over the last month. Institutional investors, they're shorting retail stocks. They're just shorting them into the ground. AMC is a part of that. But AMC is different because they are going to have a very strong year next year. Take a look at this. This is something you will not hear in any video that I have seen on YouTube, or specifically in financial media. And this should be like your backstop, your worst case scenario, right? AMC is projected next year, and I'll cite that source right here, is projected to do in between $4.87 billion of revenue to $5 billion of revenue next year. Where does that put us? That puts us at almost 2018-2019 levels of operating revenue at about $5.5 billion. But the cost of revenue was $4.6 billion. The cost of revenue in 2022 is going to be about $3 billion to $3.5 billion. That's still $1 billion cheaper to generate the same revenue that we were seeing during the good years, 2018, 2019. So what does that mean? That means profits, big profits to the bottom line, potential special dividends. But at worst, the short thesis would then be crushed because AMC would be making a profit. Something crazy happens when a business is forced to shut down and cut costs dramatically. They don't start spending their money on bullshit once the business is doing okay like it is now. But even on top of that, the cash reserves are incredible. Back here, 2018, 2019, we only seen on a, average these out about $285 million of cash between these 2 years. Now we're at 1.6 billion. So there is room for special dividends. There's room to grow the business. There's room to add value to shareholders at the current moment. So I want to put that in there for you guys, just in case you have not heard that before. That is something to be incredibly bullish about. But even on top of that, TD Ameritrade, short interest is 40.25%. I have said all along it's in between 40 and 80%, so it does not surprise me. But I think it's more accurate to where the number actually is, because they're using the option chain. By they, I mean hedge funds, market makers, everybody involved is using the option chain to hide that incredibly high short interest. And that's exactly what we see back here for January 21st, 2022. 308,000 puts that are out of the money, 63,000 puts that are in the money. Retail, some people might be shills and they might be bearish on AMC, but by all means, they did not purchase even a fraction of these puts because they are very expensive, right? So they're going to be faced with a very hard choice coming January. Do we roll these puts over and continue to hide our short interest, or do we sell the puts? Do we cover on our short interest before it ever gets reported by the exchanges and just get out the trade? I think 2022, there's a strong case to do that. That's certainly what I would be doing, is taking the loss, covering on my short position if I had one. But even on top of that, on the call side, 464,000 calls that are out of the money, 113,000 that are in the money. That's about 11.3 million shares that will have to be hedged for if AMC stays at the same price, as much as 46.5 million shares that will also have to be hedged for if all of these ran from out of the money into the money. Obviously, that's not all going to happen, but we do have a ton of open interest held at that $40 strike, about 56,000 for open interest at the $40 strike. So that's incredible. That will give us a boost, in my opinion, to that $47 price. But really, my price target is in between is about $60 in between mid-January to mid-February. That month in between is going to be very volatile and very, very exciting. Now, as far as some other things you guys need to know, take it with a grain of salt, like I say all the time, but the Ortex short interest of free float, 17.07%. Current shares that are sold short of about 87.61 million. Share utilization, 76.5%. Days to cover, 2.35. What does this mean? Well, this means it's very hard for shorts to get out of their short positions if they want to very fast. If all of them go to pile out of their short position, something crazy comes out, it will take 2.35 days to do so. Whereas AMC would search more than the word stimulus check in 2021. Everybody and your mom's cousin's brother is going to be buying AMC at that moment in time. So it's inevitable. This data has to come to fruition. We are also seeing the cost to borrow max ticking up slightly at 2.32%. So what does this mean? Shorts are basically fucked. Like I just said in the last video, they're fucked. There's no way out of it. They're doomed. We're also seeing hedge funds like BlackRock's emerging market ETF drop 91%. People are pulling their money out of hedge funds at an astonishing rate. That's why you see Citadel, all these big time players, these hedge funds, they want to hold on to your money like it's a hostage. They don't want to give it back. Why? Because you're asking for it back. People don't want to be invested in Citadel especially, but other hedge funds as well, as they are only up about 8% for this year, and the S&P is up 27%. Now, in November, hedge funds also lost 2% on average. In December, once those numbers come out, you're going to see losses in the range of 4 to possibly 5%. Unless you're invested in the large cap stocks or you just got really lucky in some big winners, which is not going to be the average hedge fund, then you're going to get destroyed. And that's very prevalent. You also see China's top quant hedge fund, High Flyer is the name, apologizes for losses, saying that we feel guilty. The Hangshu based firm said. High Flyer managed about 90 billion won, $14.1 billion as of September, making it the largest quant hedge fund in China. Assets have since dropped notably. A company representative said without giving an exact figure, while the majority of its clients still made money this year, some have seen losses on paper and returns that failed relative to the index, according to the statement. And we have made so many videos going over this. Hedge fund after hedge fund after hedge fund. They're all failing. And then people are pulling out their money at record paces. So what does that mean for AMC? What does that mean for the moass? Let me say this as simple as possible. It doesn't matter where AMC goes. It doesn't matter if we go to $2 per share or if we go to $2,000 per share. If these hedge funds are doing well and they say, hey, here's $50 billion. Service the margin call. We're good. We're not going to cover. Now, when their hedge fund loses 50% of their value because they're shit investors and they've been basically losing money all year, with the average hedge fund up 8%. You can imagine some are down quite substantially, like we've covered here on this channel. But throw that out the window. They're down a lot of money. They now do not have that kind of money to service their margin calls. And just having a short position in general takes collateral. So if you're really down substantially, like we have went over 10, 20% on any given month for some of these hedge funds, you're more inclined to grab your hammer, crack the piggy bank, cover on your short position, suck up your goddamn pride, and cover on your short position and take your collateral back out. So that's basically the scoop. The markets today, not doing all too much. There's a lot of Omicron fears, a lot of COVID fears. U.S. COVID cases rise to pandemic high as Delta and Omicron circulate at the same time. I know everybody's sick of hearing that, but it could affect us. It might not. I don't think it's going to affect AMC and this move that we see, the boom, boom that is coming. I think it's going to be incredible, and I think you want to be in AMC stock. We have not quite broke out above the 20-day simple moving average. You guys can see right here, we are testing this right now, but it does look like we are gaining momentum and that we will break this by, the last couple minutes of trading here today. So it's looking really good. That's basically all I have for you guys. That's really all you need to know in the grand scope of things. We covered a lot here in this video. So if you guys got value out of it, hit the like button for me. Consider subscribing to the channel. Check out the comment down below to go follow me over on Twitter. And if you guys want access to all of my trades in real time, we are starting a trading challenge here on this channel. Maybe on another channel, but we might just do those videos later at night so people that want to see them can see them. But essentially, we're going to take $500 into $5,000. I don't know how long it's going to take. You don't rush those kind of things. You wait for the trades to come to you. And we're going to document that. I'm going to show you guys all the trades, not live or in real time, but definitely the wrap up of those videos. So if you guys want access to all of those trades and other trades we will not be doing in that challenge, then check that out. That is for you, as well as links down below in the description of this video. But here comes the boom. Let's go, baby. Love and appreciate you guys. Thank you for watching this video. I will see you in the next one.